Hey guys, it's Will here. Going to go through the markets again, stocks, ETFs. I just wanted to point out that today we had a inflation CPI that came out at 4% annual rate. So that's the monthly inflation that's annualized. So it's still obviously inflation, it's still going up, prices are going up, but it's the lowest in 2 years. And the markets are doing pretty good right now. They're up 0.5%, 0.6% for the NASDAQ and the S&P. Russell's up 1%. This is around 12:20 Eastern time in the States. So that's kind of the thing. And then there's going to be a Fed discussion, like about rates. So I guess people are expecting that to stay, at a pause. But Canada and Australia raised their rates 0.25%. So, but essentially, we're expecting a pause at this point. So from there, I go to the markets tab on my TC2000, and we'll go through some of the markets, the charts here. If you want to get a free trial or $25 off your subscription, check out the link in the description below. So thanks to everybody who's got this. I hope you're enjoying it. It helps support the channel too. I get a little commission for people that sign up for TC2000. I've had this for a number of years. I look at it every day. So, and I try to help you guys with some tips and pointers. They did make a little change, or they made some changes to the recent update version that they have. And so I just want to talk about quickly. I just thought of, I had an issue where, because of some stuff I'd done in the past and changed the charts, that the condition, I did a condition where I wanted to see that you're above the volatility stop, this green stop. So I was using, at the time, apparently when I created the condition, it was using Heikin Ashi. So Heikin Ashi is a different way of calculating candles. So I had a bit of an issue where it wasn't quite reflecting. The check mark is supposed to be if it's above the daily. Like here you see it's green, it's above the green, it's a check box. If I go down here where VIX, there's no check box for the above daily for VIX, and you can see that it's a red volatility stop. So that's correct. But if you right click on this and say edit column, it'll say it's above volatility stops 21.6. So if you go up here and you change the volatility stop from the factor from 2.0 or 1.5, whatever you want to use, it may not match what's in this column here. So you can go right here and change it. Just click on this volatility stop 1.6. But if it's not working and you don't have it quite matching what it should be on the chart, what I did was I just right click and I say edit all columns. Now they show you, this is a little different. Now they're showing you all the columns, which is kind of nice because you can turn off any column you want and you can filter and stuff like that. So if, say for example, this above daily isn't working, you can add a column here, add a true false, because that's a condition. And then you should have a condition that you made called above daily. So that's what I have. I'll show you how to do that in a second. So then you would click that, add that column, and you delete the one that wasn't working. If you get a certain column that isn't quite reflecting, because of maybe something you've done in the past where you were using different, like I said, the data. But to create a condition, if you go to the moving average or whatever thing you have, your volume, whatever is on your chart, there's a little down arrow, click on that, say create condition, and then you say add a condition. And then what you'll see here is, because I picked the volatility stop, it'll just say greater than 0. And I don't want that. So I'm going to click on this, you get a whole bunch of things, and I'm going to say above the volatility stop. And then I would give it a name and save it. So I've already got that saved as above daily. That's how you create a condition. You can create conditions on moving averages. Like if I go 50, I can say, like if I don't want to use that, I can say, instead of just 50 is greater than 0, I can say, the 50s cross to 200, or they can use different moving averages whenever they cross, if I wanted to, the 34, stuff like that. Anyway, So let's get back into it. So IWM, so one of the things I use, you have a break of this downtrend, you have rising bottoms here. You can see pull back here, break of a downtrend, and we're in above the volatility stop. So this is a good looking chart. Price percent oscillator is above 0 and it's crossed over, so it's above the moving average. So IWM is looking good. It's been beaten up pretty bad because of the banks, partly. If we go to S&P 500, you can see we broke some previous resistance here. We're heading upward. That looks good too. Rising bottoms here. So I like to draw little lines underneath here. You can sort of see how we're slowly getting more rising bottoms as we get up. That looks really good. Obviously the NASDAQ's been really good, and it's pretty high and extended, like I mentioned in the last couple of videos. But as long as you're, say above the volatility stops here, you can stay in. I drew a little line here at the lows, so that could be, instead of using the volatility stop, which is a bit of a closer stop, you can use a low here, like a recent pullback, because that's kind of a potential support point. But when you're getting extended, it's up to you if you want to have a closer stop and make sure you lock in some profit. So that's up to you to decide. Dow's looking good. We're broken this sort of sloping downtrend here, and we broke above it. The low point is a bit of a ways away. It's not too bad, but 5% from down here. So if you use volatility stops, you might get stopped out. Like you see how you get this pullback here, and then it goes back up again. So you'll get stopped out. But if you use a low way down here, you're willing to lose a lot to get back down to that point. So Dow is so we're starting to see a broadening of the market from the NASDAQ into other markets like IWM and the Dow. And the dollar is sort of bouncing off that recent double top here and heading down below the 200. So this could be heading across down on the price percent oscillator or MACD. So we could be, it's hard to say, it could be flat, but it might be heading down as well, which is generally good for the markets. So from there, what I do is I go to the US sector ETFs, and right now I have it sorted by the percent change for today, so you can kind of see. So hydrogen has been doing really well. You can see how it started to come up here, got above the 80 EMA, did a little pullback, and now there's a big jump. And so these are strong indicators. I have a column here called price percent oscillator slope, and that's a bit tricky. It's a formula, but I use the MACD essentially, but I take the MACD, and when you put 0.1, that means the previous day. So what you're doing is you're just subtracting MACD from today minus the MACD from tomorrow, from yesterday, I mean. And usually slope is rise over run. So the run would be like 1 day sort of thing, right? So you have like the rise is the difference between the MACDs, and the run is the day, which is 1 day difference. So it's just a rough idea of what the slope of the price percent oscillator is. If you click on that particular day, like if I click on any day here, you'll see a pop-up chart box, and you can see over here it says PPO slope is 0.77. So right over here, oops, hold on a second. I'm going to just click on that. So you see the price percent oscillator is 0.77, and that matches what it says over here. So when you have everything that you have on the chart becomes a value in that table. So down here I put price percent PPO slope. Here's another spot. So you can see that the slope is obviously heading up here. This is the slope. It's not the price percent oscillator, it's the slope. So you could see like the slope is increasing if you want to sort of plot or look at the moving average to see that the slope is increasing. But all that means is the strength of the momentum. So you might want to pick things that are strong momentum. So instead of sorting by percent, you could go like click on that one, and you'll see things that have a strong, see like soybeans are going up pretty steeply. Bulk dry, that's the shipping stuff. Retail has gone up like a big jump here. COPX, so we're getting some industrial stuff. So here COPX, we broke the recent downtrend here and we're above that now. We're just right underneath the 50. So if you click on this component watch list, you'll see like FCX, that's usually what people buy, Freeport McMoran. So if you wanted to buy individual stocks, Southern Copper. So that's one way to do it, is sorting by momentum. And that can change, but it gives you ones that are usually doing pretty well. If we go back to percent change, you can see oil's bounced up a little bit. UNG. Now this one, it's come down so much and it's flattened out quite a bit. So it's kind of ripe for a turnaround. You can see how much it's come down. Unbelievable. But it's kind of, at a pretty low point here. So you can wait until you see a bit of strength. But, this thing looks like it's flattening out and probably will turn around at some point. So banks are starting to come back. KRE, regional banks. So that's, you see how much it came down and now it's got higher lows. That's what I always talk about, a break of a downtrend, higher lows. So that's right around here. So I'll put an arrow like in this TC2000, there's this little palette. You can put a little arrow there just to show like if you didn't buy where you should have bought for learning purposes. You could buy the first breakout, but you don't have a higher low at this point. If you want to look at the green volatility stop, that's a bit of an earlier entry and then use that low. And you have a rising momentum coming in as well. So KRE, there's been a lot of stuff with cars, like Tesla has gone up a huge amount. So you can get the individual stocks. Lithium looks really good. It's broken up above the 200 and it's got rising bottoms here. It's right at a couple of high spots, but it's broken up. Here it kind of bounced off the 200 a couple of times. But so Blink and Plug, I mean, they're down a lot, but just a poke. It's nothing major right now, but that's just a little blip. But Plug is doing a bit better. We have a break of a downtrend. We kind of do have higher lows because if I draw a line, so I hold the shift down, I get a little bit of a horizontal line. And then I can draw another one here. And even right here at the 50. So when you see a support, when you see it reverse, pull back and bounce off the 50, that's usually a really good spot to get in. So rising bottoms, break above the 50, big gap between the 200. So you got room to move up to that 200. Yeah, I think that's all I'm going to say for now. This is kind of the process I use to find things that I want to buy, either stocks or ETFs. Mostly ETFs at this point, but if you're up for the stocks, you could do that as well. Bitcoin this is inverse biddy. It looks like it's a potentially good spot to get in, but crypto's been a little bit flat in terms of volume and stuff. You can see here I've got this volume drop. It's not doing much. So if we go to like GBTC, which is the ETF or the fund, we just broke this recent support, and Ethereum as well. So it's in a downtrend for sure. So you could get the inverse of that, which is biddy in the case of Bitcoin. Okay. Yeah, so don't forget TC2000. I encourage you guys to pick it up, get a free trial, check it out, see what you think. I email support. I get a really quick response whenever I have questions or issues. And you can get a free trial or $25 off your subscription. I've got the gold plan, and there's different levels, silver, gold, platinum. And I've got real-time data because I don't want the 15-minute delay. I pay for US real-time data. That's up to you though. Hope that helps, and we'll see you in the next video.